Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review on Friday, February 2nd, Groundhog Day. Watched the festivities this morning with my kids. Early spring this year, very exciting. But on to less important matters like the market. It's been an interesting week, seriously. It's had the Fed, and this morning was the jobs report. And so, officially, primary evidence, nothing's changed, and our stance hasn't changed. The action of the indexes, trend is up, trend of most sectors, stocks still up. And most importantly to me is the action of leading stocks is great. A lot of the action right now, tech and AI, but even like in Top 10 Trader where we're just screening for strength. So there's plenty of tech in there, but there's home builders and there's all sorts of stuff in there. Very, very few breakdowns, very few stocks acting abnormally. Even things that maybe have wobbled so far on earnings, like say some home builders, haven't broken, kind of holding support. So it's been good, and we still are seeing some really powerful upside gaps on really, not all the time, but on some really impressive volume, like biggest volume in 5 years for XYZ stock, which is a good sign. With that said, like I've been sort of talking about the last week or two, is it's important to keep your feet on the ground. We do have some, I don't want to say storm clouds because that makes it sound like it's going to rain. They might just pass over the horizon and not touch us. But we're starting to see a couple of things. Number one, the broad market hasn't done anything in the last 5 or 6 weeks. So again, it's not raining, it's not bad. It's just sort of not moving. So it's been kind of stagnant here since late December. Small and mid caps are testing their 50-day lines, things like that. Plus, we're now seeing sort of last year's bugaboo, which is these regional banks, and the Fed isn't going to cut anytime soon, it doesn't look like. So the regional bank stocks are down 8 or 9% this week, depending on the minute that you check. So you just see, rates were way down on that. Now they're back up on the jobs report. So there's just a lot of more cross currents. I don't know if you want to say storm clouds, yellow flags, cross currents, whatever it is. I just think there's things to really kind of focus on. And if they get worse and really break down, my guess is the market's going to have, some issues here and have a pullback. If not, the market could be fine. Maybe there's rotation, maybe not. What am I trying to say? Keep your feet on the ground, have a plan in place. In Cabot Growth Investors Model Portfolio, we haven't done anything. We're 23% in cash. I haven't bought, I haven't sold. Okay, so I'm not advising you to go out and make a bunch of changes. However, you want to have your plan in place, both on the sell side, meaning maybe a partial profit or two on the way up in some of these stocks that are gapping higher and super extended. Obviously, raising your stops along the way for other stocks, and on the buy side, keeping up to date on earnings season, and some names hopefully I'll mention today that have really gapped up strongly, and seeing if you want to nibble on those, ideally on dips, things like that. Overall, I don't want to come in here and talk like negatively, and because I tend to lean against the wind sometimes. Big picture, the evidence is still positive. I think a lot of the stocks that look, quote, too high right now probably will have a correction, but also probably will be nice, not all of them, but some of them will be nicely higher, 3-6 months from now. So I'm certainly not sitting here trying to talk super worried about it or say the Fed is going to crush us again. But after 3 months of great action, you just want to realize that we've had 3 months of great action, and whether it's taking partial profits or holding off new buying or just being more discerning on the buy side, it just makes sense to have that in place, okay? All right, enough with the preamble. Let's get into the charts, show you what I'm talking about. As usual, I'm using a program called MarketSmith. You can learn them at marketsmith.com. It's a product of Investors Business Daily. So it's really kind of a, divergences. You can always find a divergence in the market. Not everything is going to be in gear at the same time. And when it is, it's usually very bullish, but it's pretty rare, okay? Right now, here's the NASDAQ, looks fine. Okay, you had, let's get the pen out. You had this sharp pullback. This was the Fed day on Wednesday, I guess it was. And then a nice rebound yesterday. And then today, even though rates are up and the job report was strong, which is, quote, bad, because the Fed and all that, you've had a bunch of good tech reports. Meta is going wild today, stuff like that, Amazon. And the NASDAQ's back up there. Okay, S&P 500, looks fine, way above, actually hitting a new high today. Okay, the IBD 50, which is sort of my, cup of tea, which is, growth stocks, maybe emerging blue chips, however you want to think of them. But this isn't updated during the day, but you can see as of yesterday, basically at almost a new closing high yesterday. Okay, and just things like semiconductors, just to pull one sort of growth area out there. Yes, they pulled back in here, but look totally fine, clearly in an uptrend, okay? Then you start to kind of dig a little deeper and you have, and I would put these more on the positive side, but this is the 10-year note. A weekly chart kind of cleans it up. It was down big this week. It's still down for the week. It's down 12 basis points as I record this, whatever. But a big up move today. It's kind of hard to see. The chart's a little messy here, but just take my word for it. Today it's up. The 10-year note itself is up 17 basis points on the day. The 5-year note is up almost 20 basis points just today. Of course, this came after a couple of bad days, okay? So rates, though, still in a downtrend, but also still after today, kind of testing, or during today, still testing sort of intermediate term support, okay? Then you kind of dive into the broad market, okay? Here's IWM, testing the 50-day line, okay? Even though the NASDAQ and S&P are up here, so to speak, here's the broad market. Mid caps, MDY, not quite testing the 50-day line, but pretty close, okay? And then even RSP, which is the unweighted or equal weighted S&P 500. Again, this is what I mean when I say, I don't want to say like storm clouds, but it hasn't done anything wrong. I mean, you look at this, and then it's just kind of done this. I mean, it's totally normal. It could be setting up a really good entry point, so to speak, for the broad market. But when it's kind of stretched, or divergent, I should say, from the stretch stuff, it just raises the risk of, some sort of either broad pullback or rotation or just some sort of change in character, really, that you just want to kind of be on guard for or be on the lookout for, okay? Then you just have, you could look at any sectors, but, this is like, here we go, maybe? Okay, here's the Dow Transports, same sort of thing, just kind of not bad, hitting the 50-day line and holding it. Maybe it's setting up a great entry point. You could say, hey, Mike, this is a big base in here. But that's, same sort of action as the broad market. Industrials kind of nosing the new highs, but not a ton of, movement here. So it's just one of these things where you have some stuff doing really well and a lot of stuff sitting there and, so on and so forth, okay? Then you, again, keep digging deeper. This is the KRE, which is the Regional Bank Index. It's come back this morning, so it's about even as I record this. But on the week, you can see, I think it was New York Community Bank, I guess, reported earnings, and they have a big loss. And I don't really know the details. It doesn't really matter, to be honest with you. But the stocks are acting poorly. So this week, it's down 7.2% as I record this. Is it just a shakeout and then, these things kite higher? Hope so. We'll see how it goes. But, that's certainly going to weigh on the market. And then you also have a little bit of this is early, it's still early, but XLP starting to perk up here a little bit. And I can't show it on this chart, but like relative to the NASDAQ, obviously today is helping, but it just got down to key levels again, kind of right below the 50-day line of our aggression index. So again, there's a lot of things just that bear watching, but haven't broke. It's like things are testing the 50-day lines, but haven't broke. The aggression index is down to key levels, but hasn't changed character. You know what I mean? The XLP is perking up, but it's not, soaring to the heavens or whatever. KRE is weak, but it hasn't dragged down the rest of the market. So there's just more and more things that are starting to pop up, which isn't unusual 3+ months into a rally that you want to keep an eye on, okay? So overall, I'm bullish. I mean, like I said, I haven't done anything. We're still holding our winners, but I do have a plan in place. We have a couple of small positions that are, close to being sold. I wouldn't say close, but, are on the edge. There's luckily many stocks that are acting very well, but, there's a couple I might take partial profits on. And then I have my buy list ready that I'm adding to here as earnings season goes on. Okay. So just make sure you have your plan in place type thing. The other thing I just wanted to mention real quick, again, so this is NVIDIA, it's been kind of the number one, not just AI, but kind of the growth leader. It had this big base right around 500, broke out, the second week of the year, I think it was. And it's had a big, it's up 30% in a month, call it, okay? Is there anything here that screams to me like it's topping? No, it's not like I see on the chart, now maybe you get a couple more gaps like that or some huge move where it's up 10% in a day. Maybe that's a little different, but at the same time, if you bought it here or you own it here or whatever, I mean, if you have a good profit, there's nothing wrong with banging out a little partial profit, okay? Depends how you want to do it. Not saying you have to. It's not about predicting what the stock does. It's about just lessening some risk, putting some profit in your pocket, and then hopefully your remaining shares go to the moon in the next 6 months and the stock's at $1,000 or whatever. But, in case the market does have a pullback or chip stocks are rotated out of for the next 3 months because whatever. There's restrictions placed on Chinese, exports to China. I mean, who knows? whether it's this stock or any stock, just taking a little partial profit. I mean, another example, I had another example, Verta, VRT. This is another name that got going last year. This was the initial AI wave, and it made progress from here, but it was choppy. It kind of went, I don't know, the daily chart's kind of better, but you can just see it. It spent a lot of these times kind of going nowhere for 5, 6, 7 weeks net, but it never really violated it. Dipped below the 50-day line here, but clearly in an uptrend. And now you're just kind of accelerating the upside. Here's a gap, here's a gap, here's a gap this morning. It's a little hot and heavy. So if you own it, don't be afraid to take a little partial profit is my advice. You don't have to. If you just want to trail a stop, that's fine. And if you have a tiny position, it might not be worth it. All that is up to you. But in general, just keep, like I said, this is part of keeping your feet on the ground, is recognizing that, hey, back here at the end of October, things were, okay, but tedious. Is it going to break down? Now it's like flying high, way above moving averages. Big gains since then. Maybe you throw a little bit, you feed the ducks while they're quacking, so to speak. Okay. So just something to keep an eye on. Now, with all that said, I would say the most bullish thing that I see out there, the most encouraging thing, is there's a lot of stocks that are still not just gapping up on earnings, but it's like gapping up and the volume is huge. So it doesn't guarantee anything. Sometimes that can come at the end of the move, but I'm not seeing this in stocks that are like Vertiv or NVIDIA that are racing higher. I'm seeing this in stocks like ASML, which, this was its peak back in 2021. It kind of built this base here for the last, 3 months. And then it reacted to earnings. This is last week. And I believe this was the heaviest volume weekly since 2009, I want to say. Don't quote me on that, but it's been for a while. And the stock acts well, okay? Taiwan Semiconductor, TSM, not quite as dramatic, but again, you're getting this sort of nice base in here. Again, another chip equipment play. Really, really big volume. I think this was like the third or fourth heaviest week in 4 or 5 years, so it's very extreme. We'll see how it goes from here. American Express. I mean, you wouldn't think of this as, it's not a go-go stock, But again, you kind of have this huge consolidation since, the bear market started back in late 2021, and this big bottoming effort. But the stock reacts to earnings last week, I believe it was, big volume here. Okay. And since then, just kind of holding well. And more importantly, not just holding well, but it's just a lot of these stocks, like if you look at ASML, which granted is like a almost $900 stock, but it's tight and it moves around points wise, but it's not like this week the market was way down and then way up the last couple of days and moving around. This is kind of up, and it's just sort of like anytime it tries to dip, institutions are like, no, I'll take some, very much under control, I guess is probably a better way of saying it. Decker's Outdoors, DECK, not saying it's a great buy point, but just again, pointing it out today, a big earnings gap. And then also, Meta, that's right. I just wanted to point this out because, we'll see what volume comes in right now as I record this. It's like 42 million shares, but it's like 60 to 70 million shares was kind of these earnings moves, back here in the last 3 quarters. So, we'll see, if it comes in at 90 or 100, obviously the stock is moving to new all-time highs. Again, it's hard to sit here and say that this is some initial breakout. I don't think it is, but when you're seeing this much volume, and if the stock doesn't kind of keel over within the next week, the people sell into it, it's usually a pretty good sign, obviously, that big investors are interested. Okay. Other ideas, just today again is good for tech, but this is Shopify. They do have earnings on February 13th. But interestingly, the first kind of test, you could kind of say this was a test, but the first sort of official test of the 50-day line yesterday, and the stock is popping off it today. Okay, the weekly chart kind of shows it actually is up on the week, closing tight ahead of earnings. RP line looks fine, looks like a decent setup. Do what you want with it. Bull market stocks, interestingly, despite all the commercial real estate worries, which is really what it is with some of these banks and all that sort of thing. This is Apollo Global. The RP line is lagging here, but it's not a fast moving stock. But in terms of a bull market stock like KKR or whatever, hitting new highs, that's pretty good. United Rentals, this is industrials. Nice reaction to earnings. Not the thickest name, but it trades plenty of volume, dollar volume anyway. Nice initial breakout, reasonable pullback, reacts well to earnings. Maybe you get a consolidation here or a dip as the moving averages catch up, but that acts well. A couple of potential earnings plays. So first, I guess I could have mentioned this on the earnings slide, but this is NVO. Did report earnings. Obviously, their weight loss diabetes drug selling very well. Stocks pops to new highs. Not record-setting volume or anything, but pretty good. Lilly reports next week. It's obviously been kind of, they're kind of not sister companies, but they swim together, Lilly and NVO. This has February 6th, so see what happens, but overall, maybe these are starting to accelerate to the upside and really outperform the market, okay? Terex, this is kind of in the URI fold, but I just noticed this. Some of these industrial names have been acting well of late, meaning the last 3 months, but are still within this sort of consolidation period. Stock acts well. I mean, very tight in here. Earnings next, let's see, February 8th. So see what happens. I'm just saying, maybe a potential gap or whatever. And then EXPE, I've mentioned this a bunch, so we'll see. It actually is, you can see, again, kind of like Shopify, first sort of, quote, official test of the 50-day line here. The last couple days, it's found support. They do have earnings again, February 8th, weekly chart. I mean, just very tight. I mean, 1, 2, 3, 4, 6 weeks of just tight trading. So a lot of that sort of action in the broad market, if we follow through to the upside with some of these stocks and like RSP and stuff like that, I think it could be pretty bullish for the broad market, but you kind of want to see them actually break out. If they all start gapping down on earnings, not so much, okay? And just a couple other ideas that were sort of older, I don't say older names, but names I've sort of watched on and off the last maybe year and, either got going, like here's MDB, this is MongoDB, bear market, and then it reacts well to earnings here. I want to say this is like last June, but never really went anywhere. Kind of the 400 level, just kind of stuck with it. But now it's spent 7, 8 months. I'm not going to count it out here, but it's kind of this sort of base on base thing. I don't know, it got hit on earnings, but it's holding up well. They don't have earnings until early March, but just sort of noting it like, okay, maybe some of these things kind of join the party. Pure Storage, PSTG, excuse me. Again, it kind of sort of like Mongo, it got accelerated higher on the AI boom last summer, spring, summer, and just kind of waterlogged here. It just, here's a bad reaction to earnings, but then it blah, blah, blah. But now it just kind of suddenly, it got hit on earnings, but then just immediately sort of turned around, tightened up, moved to new highs recently. Just keeping an eye on it. I wouldn't say you can't just say, well, all of a sudden it's a new leader. It probably needs to show something, but say the market or say tech does pull back and some of this stuff holds up well or even advances, that would be a better clue. And then also, I'm still seeing a lot of normal action in housing. We'll see how it goes. I mean, obviously if rates spike, it's different. But this is Zillow, and it's, just a horrible, really big decline. And then it got really hit again here last summer and fall. But it's really rounded out here. Nice volume on the upside. Back to the daily chart. You can just see this nice volume cluster, which was this was when the Fed initially said in December, they're going to stop raising rates basically. Now we're kind of waiting for things coming into view of like, when are they going to cut? They say not in March. Okay, let's say not March, but is it May? When does the market start to run ahead of it? And it's just kind of set up this little, I don't want to call it a base, but this little sort of consolidation in here as the moving averages is caught up. Again, this is one where maybe if there's some rotation, broad market, so on and so forth, you get kind of a resumption to the upside and, quote unquote, a breakout. So overall, just to be clear, I'm bullish. I think, as I've said before, I think there's a chance that we launch something more meaningful in November that can go on. Not that it's going to go like this for a year or two straight up, but, that can generally be, quote unquote, a real bull move for a lot of stocks and a lot of growth stocks that have been on their knees for a while. I still go back to not to go on a tangent, for the IBD 50 chart, or the mutual fund index. I presented this in my webinar. You can get a recording that at cabotwealth.com. But just, starting to come out of this sort of big, almost year-long, pretty much bottoming process. So, I'm optimistic if things go right and, obviously the Fed doesn't keep raising rates or inflation really accelerates. If things go right, I think it can be a really good year. But that doesn't mean you want to leave your brain at the door. And when you have the market and a lot of stocks up for 3 or 4 months, when you see regional banks getting hit, when you have the broad market, some of these, small mid caps testing 50-day lines while the rest of the market's up here, just keep your feet on the ground. Know that, not that I'm predicting a pullback, but just know that the odds are starting to get higher, that there's going to be some sort of change in character, which is normal, but some sort of rotation, or this group goes out of favor. You got earnings reports coming up, that sort of thing. So just my message to you is enjoy the ride, maybe take a partial profit or two, hold your winners or most of your winners, okay? But also have your plan in place in terms of stops, partial profits, and importantly, buy list for any, fresh earning winners like we've just seen here in the last few minutes, okay? All right, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.